Let's go through your system. I'll get more clarity then.
Absolutely. So my system is basically, Vivekji, I accept bets on both sides. Okay. I accept bets on both sides because the way to look at it is, as an individual, as a person in general, I prefer having a high win probability. Okay. I want to win most of the time because as human beings, I think they're psychologically programmed that we should win, and that'll keep our morale high and confidence high. But at the same time, when I lose on that high probability trade, my idea is cut those losses quickly.
Okay.
So what I try to do is, for example, I will go over my analysis. There are three things that I analyze. I analyze the charts first. I look at the open interest, and I look at the pricing of the options itself. Okay. So pricing of risk will also give away a good amount in terms of what can be the market volatility. So I will just go over now. Let's, for simplicity's sake, look at it on a 1 hour time frame. Even if you know nothing about technical analysis, anyone can identify the swing highs and swing lows.
Correct.
Right? So let's look at the basic swing highs and swing lows. We can say this was a swing high. Right? This was a swing low. This was made in a bit of a panic. Right. But and how many days in this? Just look at the past 10 days maybe, not more than that.
Okay.
And the closer the date, the more important. Any particular swing, the closer, the more important. Now we can say that, okay, here also we can see 1, 2, 3, 4. Many times this has acted as a particular level, right? So we can mark that as well. And on the downside, this zone once again, right? 1, 2, 3, 4 we can see. Now this has roughly given us what range Nifty is trading in.
Okay.
Right? Nifty, we can say the super broad range is 17,600 and 16,400. Okay. Right? And we can say that, okay, otherwise the range that we can work with is about 16,850 and on the upside 17,300.
Okay.
Right? What I want to do is above this and below this, these two particular lines that we have marked, I want to try and sell options there.
Okay.
So what ends up happening is those options will most likely be trading in a downtrend. Yeah. Right? It is very simple, and they will not react too quickly to the movements. If we trade here, if we trade at the money or close to money, especially when the implied volatility environment is low, then there's a good chance that we get pushed out. If you're trying to play both sides, it becomes too aggressive when you're too close to the market. So I try to sell above this line and below this line.
That is because of the delta, right?
That is because of the delta, because there will be higher delta the closer you are to at the money. So that is one thing that I look at. The second thing that I look at, and this will come to OI.
So when you say you play, that means you sell.
I sell, yes. So I'm taking a high probability trade. So I'm selling both the options.
Okay.
I'm selling both the options. I'll get into exactly which options I select. Second thing I want to look at is the OI. And now here intraday OI gives us how the market has been positioning. Now today we had a gap down opening. From there we have seen very strong put writing all the way till 17,000. Right? So that shows you that people who are writing these put options, they believe the downside is limited. And that's why we can say that, okay, market has, after the gap down, continued to move up. The second thing to look at is point of maximum congestion. This is from the overall OI. Point of maximum congestion is nothing but the point where there are maximum number of call plus put.
Correct.
OI.
Correct.
Market has a tendency to always move towards this point of maximum congestion.
Right.
If the market, like for example, in my trade, if I want to create a bias, I will always create a bias that the market will move towards the point of maximum congestion.
Okay.
So if we gap down, then I will have bias as a good chance that we get pulled back till the point of maximum congestion. Now, as we head higher, my bias would be that no, we'll come back to point of maximum congestion. And also, we get to see that where majority of the market is positioned. For example, let us say there was big 16,800 here and 17,200. I want to sell strikes which are beyond these.
Okay.
Because these are the guys who are first at risk. The thing is, by the time the risk moves on to the further away strikes, by then I would have long gone with my stop loss. So right now, from looking at maximum congestion, we also get to see what is the pricing of risk. Pricing of risk is basically the price of the straddle, sir. So right now, the 17,000 put option and 17,000 call option together are trading for about 250 rupees.
Right.
So the risk that market is pricing in is 250 points on the upside, 250 points on the downside. So that gives you an expiry range of 16,750 on the downside and 17,250. That Correct. Is that you basically add and subtract
Correct.
From whatever that point is. Now, I want to ensure that whatever strike I sell is at least one strike away from here.
Okay.
So the minimum that I would want to sell is 17,300 on the upside and 16,700 on the downside.
Sure.
What this gives me is because my trade is only for the day. I mean, this is pricing all the way till expiry.
Oh.
My trade is going to begin and end today.
Okay.
So I want to be in a position which has a high enough probability that today itself it makes money for me.